Okay, if you've been paying any attention to the markets, you know that almost every conversation seems to come back to one thing: artificial intelligence. The hype is everywhere. Investors are pouring billions into AI stocks, and valuations are just skyrocketing. It really feels like we're on the edge of a massive revolution. But, it's also making a lot of smart people step back and ask a really critical question.
Is this whole AI stock boom just a giant bubble that's about to pop? Or is this the real deal, the beginning of a fundamental change in our entire economy? It's the multi-trillion-dollar question, right? And to really get to the bottom of it, we have to look past all the flashy software and algorithms.
So let's pull back the curtain for a second. The real story here, the bedrock of this entire AI boom, isn't just lines of code, it's silicon. It's the incredibly complex, physical chips that actually give AI its power. Because if you can understand the market for these chips, you can get a much clearer picture of where this is all actually heading.
Probably the best way to think about what's happening right now is to see it as a new kind of gold rush. Except this time, the gold isn't something you dig out of the ground. It's data. And in any gold rush, the most reliable way to make a fortune often isn't by being the one searching for gold, but by being the one selling the picks and shovels.
And in our new AI era, those picks and shovels, they're semiconductors. These tiny, insanely complex chips are the fundamental building blocks for every single AI application you can think of, from your phone to giant data centers. Let's be clear, without these chips, the AI revolution just doesn't happen.
And here's the crucial point. The demand for these digital picks and shovels isn't just some Wall Street speculation. We are seeing a real, measurable shift in the economy. It's being driven by actual businesses in every sector you can imagine, needing more and more raw computing power.
Just consider this number for a minute. A major survey by Capgemini of 800 large organizations found that companies that rely on these chips expect their demand for them to jump by a staggering 29% by 2026. Think about that. This isn't just hype. That kind of forecast is being baked into corporate budgets and strategic plans right now.
But we need to be really specific here. We're not talking about just any old computer chip. The real surge in demand is for highly specialized hardware that's been designed from the ground up to handle the unique workloads of artificial intelligence. Let's look at two key types.
First up, you have GPUs, or graphics processing units. You've probably heard of these. They were originally made for video games, but it turns out their ability to do a whole bunch of simple calculations all at once makes them perfect for training huge AI models. For example, ChatGPT was trained using thousands of Nvidia GPUs all working together.
Then you've got NPUs, or neural processing units. Now these are even more specialized. They're designed to actually mimic the structure of the human brain, so they can process enormous amounts of data using way less power than a GPU. This makes them perfect for running AI on the devices we use every day, like our phones and laptops.
And this chart right here, it really drives the point home. Look at these numbers from that Capgemini report. A whopping 88% of businesses expect their need for these specialized AI chips to go up. And it's not just AI chips either. Look at the demand for custom chips and memory-intensive chips. I mean, this is a massive signal from the market about where the future of technology is headed.
Okay, so we've got this massive, accelerating demand. But here's where the story takes a really critical turn. All of that demand is running headfirst into a global supply chain that is, frankly, very fragile and incredibly concentrated. And that tension, it's creating some enormous risks, but also some incredible opportunities. And look, this isn't just some theoretical problem down the road. The very businesses that need these chips are getting seriously concerned. This quote from the report shows that a majority of them, more than half, aren't confident that the supply of chips can actually keep up with their needs in the near future.
The best way to picture the global chip supply chain is like a long, complicated conveyor belt. If any single point on that belt breaks down, the whole thing can just grind to a halt. And there are a ton of potential disruptions. Everything from geopolitical tensions to the simple fact that the most advanced chips in the world are made in just a handful of factories, or fabs, and most of those are in one place, Taiwan.
The stakes here are so incredibly high that governments are getting involved in a big way. The US CHIPS Act is a massive over $50 billion investment aimed at bringing more of that chip manufacturing back onto American soil. It's a crystal clear sign that semiconductors are now seen as a matter of national and economic security. So all of this uncertainty in the supply chain is forcing the biggest players in the tech world to make a huge strategic pivot. Instead of just hoping they can buy the chips they need from someone else, they're deciding to take matters into their own hands.
I mean, just look at this roster. You've got Google developing its Tensor Processing Unit, or TPU, to power its AI. Amazon has its Graviton and Trainium chips for its cloud platform. Apple has the M-series chips powering all its devices. And even Meta is building its own AI accelerator. These aren't small projects. These are billion-dollar bets by the world's biggest companies to create their own custom silicon, perfectly tuned for their own AI needs.
And listen, it's not just the tech giants doing this. The data shows that a full 1/3 of all companies that depend on semiconductors are now either exploring or actively designing their own chips. We are talking about a fundamental realignment of how this entire industry works.
Okay, so let's bring this all together. What does all of this mean when we go back to our original question about a bubble? How should we be thinking about the market right now? Well, the data suggests that we might be looking at two different things happening at the exact same time. On one hand, yes, you have the short-term market frenzy, which can absolutely feel like a bubble driven by hype and speculation, but underneath all that noise, there seems to be a very real, long-term industrial shift that's rooted in tangible demand and massive strategic investments in hardware.
So I think the key takeaway here is this. No matter what the stock market does tomorrow or next week, the AI boom is being built on a physical foundation. There is a high-stakes global race happening right now to design, build, and control the next generation of computing hardware. And that's not speculation, that's industrial strategy. Ultimately, this completely reframes the debate. Maybe the most important question for the US economy and for investors isn't "is this a bubble?" but rather, who is going to win the race to build and control the physical foundation of the AI revolution? Because the answer to that question, well, that's what will shape our future for decades to come.